time to welcome Allan Small to the program. He's with IA Private Wealth, and he's our featured guest. Allan, good to see you, first of all.
Thanks for having me.
Okay, where do you think we are in this meltdown?
Very hard to say. You know, it's a lot of people are asking what to do, and you know, where are we? Are we in the first innings? Are we in the last innings? Is there going to be a deal made? Is this a negotiation tactic? And it's very difficult to say. Every time we ask the question to the Trump administration, they seem to, kind of skirt that question. And I don't even know if they know themselves. Does the president know himself what he wants? Is he trying to cover the debt levels? Is he trying to negotiate better trade deals? We just don't know. And that's what makes it so difficult. And that's why the market is reacting the way it is. The uncertainty is we haven't seen this uncertainty, I think, since COVID times, right? The market falling 5% a day. It's lost, if it goes through today, another 5%, 16% on the S&P 500 in the last 3 trading days. We haven't seen this since a complete shutdown of the markets, of the economy. So a lot of nervous investors, and where do we go from here? It's tough to apply logic to almost illogical situations. So tough to say. You have to believe that at some point the president will negotiate or begin negotiations with countries such as Vietnam. He's already spoken about that, such as the European Union. But I think the biggest one is China. Yeah. Will they negotiate with China? Will they come to some agreement? Perhaps TikTok will be somewhere in that agreement. Maybe he's trying to make it uncomfortable for China so they do hand over TikTok. I don't know, but that could be something that we hear a lot about in the coming days. Okay,
we promised viewers that you would talk about 3 of the questions you're getting a lot from concerned clients right now. Here's a board that summarizes them. The first one is, I'm very close to retirement. How do I understand? What should I do as stocks in my portfolio plunge just as I'm getting ready to retire? Number 2 is, how about we just get out of the market for a while and get back in when things look a little bit better? And the third one is, should I be substantially cutting my U.S. stock exposure and maybe overweighting Canadian stocks? Let's start with the first one first. It's not an easy time for people who are close to retirement.
Definitely not. And, a lot of people are saying to me, we don't have a lot of time to make back the losses that we're seeing already. Should we be getting out? Should we not be getting out? Answer for me simply is, I know that there's this idea out there that the older you get, the more you should be in fixed income. So if you're 60 years of age, you should have 60% fixed income, 40% equities. I look at it more from the standpoint of, what do you want your money to do for you rather than your age? And so for a lot of people approaching retirement or just starting in retirement, understand that whatever you use on an annual basis, the rest of your money still stays invested. Therefore, you have a lot of time to make back those losses. You're not going to, unless you're going to take all your money out at one time, which I don't think I've ever seen for retirement. Your money is staying in there. You're going to be investing for the rest of your life. And so, yes, you might need to take out $50,000 or $40,000 or whatever you need. But overall, that money, the majority of your money will stay invested. And you can and you will make back some of these losses over time. So don't think that just because you're approaching retirement, that's the end and you don't have any time to make back losses. You will have that time. Your money stays invested, even if it's in a RIF or some other investment vehicle.
Okay, one reason that markets are down is because there's more sellers than there are buyers right now. So some investors, many investors around the world, institutions or retail investors, are deciding to get out of the market or to substantially reduce their exposure to the market. You're facing the question, should I get out, or should I get substantially out of the stock markets until things calm down?
Yeah, and again, it always comes back to, what are your investment objectives? What is your time horizon before you need a large portion of your money? Are you looking to buy a home? Are you looking to do something large with your money? And of course, that will dictate the time horizon. But getting out is the easy part. If you're an investor that's getting out to get back in later on, that is the difficult part, because there are always storm clouds on the horizon. Even when things are good, people are questioning it. Oh, it's too good. Maybe the next step is down. When things are down, people are nervous because things are going down. There never is a time when everybody is 100% feeling great about the markets. And so getting out is easy. Getting back in, especially now when things can get a heck of a lot better at the drop of a hat. All you need to hear is a tweet from the President of the United States, and this market could rally 500 to 1,000 points. But then, are you going to get back in, or are you still not sure? So trying to get back in when you know you need to get back in because you're someone looking for growth, that's the difficult part. And so a lot of investors have stuck with this market, even though we're seeing a large downturn, because they don't believe what they're seeing. It's not logical what the president is doing, taking down global markets. It just, for many of us, we just think that there's going to be a deal at some point. So a lot of us, most of us, have stayed in this market, even though we've seen a big pullback. I'm not saying you got to stay in the same names. Perhaps you move from a B name to maybe a better quality name, a name that has fallen 30% right now, that once upon a time was too expensive. I'm not saying you need to stay in the same portfolio. In fact, I'm moving around money, trying to upgrade portfolios at this time, but I'm not getting fully out of the market because I want to be there when that tweet comes out, when that negotiation begins, because as most of us believe, it'll have to start at some point.
Okay. And the third question was, should I substantially downsize out of U.S. stocks? We'll get to that question a little later on in the morning. There's Allan Small on some of the conversations he's having with clients these days. I want, just before